YouTubers! Mike Martin's here, Mike Martin's channel. Man, do I have a great doozy of an article for you guys. Well, several articles. We'll go through them real quick. Car loan delinquencies may be canaries in the coal mine. What's happening? What does that even mean? Well, people are falling behind on payments. They're getting delinquent with payments. What's happening? The economy is supposed to be doing well, or did people get into more than what they could borrow? And I think that's what's happening. With more threats of rising interest rates looming on the horizon for 2019, I think we're in for a very, very interesting, rough time for automotive manufacturers in Canada and the US. With layoffs looming on the horizon, already a couple of shutdowns in Canada, and threats of more shutdowns in parts of the United States. Or mainly more shutting down in Canada, moving stateside. So, automotive industry observers were set ablaze last week by the Federal Reserve Bank, New York's latest report on household credit. If you think the United States household credit is that bad, look at Australia. The report stated that at the end of 2018, over 7 million Americans were 90 days or more delinquent on their monthly auto loan payments. Even worse, the number represents 1 million more delinquencies than the height of the 2010 the recession in 2010. But hold on, I think more people own more cars on the road now since 2010. We got to take that factor in. We got to factor that into consideration too. There's probably more cars on the road since 2010 too. All right. So, kind of skews a bit of the numbers here. Consumer financing metrics, these are certainly alarming and make great attention-grabbing headlines. But should we really be concerned? Are rising delinquencies a signal of underlying weakness in the U.S. economy? Well, people are being smart with their money. I made a huge video a few years back discussing that if you buy a $2,000-$3,000 used car, there's a very good chance a year or two down the road you could sell that car for $2,000-$3,000, what you bought it for, and still pretty much break even, because you'll take care of the car. If you take care of the car, you could get back what you put into it. Not put into it, but you could get back what you paid for it 3-4 years down the road. And a lot of people don't understand that, and that's very true. You buy a brand new car, 30-40% of the value gets taken off right the second those wheels leave that curb of the auto lot. So, anyways, let's continue here. The reasons to remain calm: the amount of automotive credit has grown significantly since the Great Recession, and although delinquencies volumes are high, the delinquency rate remains relatively modest. Last year, a $584 billion of auto loans were originated, taking the total of auto loans issued in 2011 nearly $4 trillion. Holy smokes. A massive influx of credits of auto loans outstanding. The 90-day delinquency rate in the fourth quarter of Q4 of 2018 was 4.47%, the highest since 2012, but also well below the recession peak of 5.27%. Still, the delinquency trend is rising all across auto loans. Part of the recent rise is driven by more credits being extended to subprime borrowers. In 2018, nearly $120 billion, or 1 in 5 originations went to subprime borrowers. People considered high borrowing risk. So again, 7, 8, 9, 10% some people are paying to drive their Mercedes, and they could show off. See, back in the early 80s, I'm talking early 80s, if you had a BMW or a Mercedes, you were rich. Do you know why you were rich? Because it didn't have auto financing back in the day. Back in the day, you had to have the money up front to buy one of those cars. And when you bought one of those cars and you drove around, people were like, wow, that guy's rich, he's got a Benz. Nowadays, everybody wants to create that illusion of a persona, but make payments on it. What's the point? Luckily I own my cars free and clear. I don't have to worry, right? Because it's an extra burden when you taking away from your potential disposable income. Hold on, guys. This article just kind of froze on me here. Let's go back. Yeah, the article froze, guys. Blank screen. All right, let's close it. New York Fed says auto loan delinquencies at its highest point since 2010. Again, Associated Press is covering it. The New York Fed reported that auto loan delinquencies rates slowly have been worsening, even though the borrowers with prime credit make up an increasing percentage of the loans. So these people wouldn't qualify at banks. So when they go to subprime, the bank lends the money to the subprime lenders at a fixed rate. usually at maybe like prime -1, so that these subprime guys, it could be prime +1 maybe, but then they're gonna have to squeeze out 8 or 9% on the customer. That's pretty harsh. I think it's prime -1 that they lend out to these huge, because they borrow billions, right, to finance these subprime places. I'm just kind of throwing that out there, right? But yeah. So that's another article there, and I got this one because I bought this car for my wife. The economy is so great. Why are car loan defaults on record high? Again, it kind of went to a secondary party. To live and work in much of the U.S., access to a car is virtually a requirement. Job shops, doctors, daycare are often unreachable by transit and too far for foot or bike. Owning a car, the research shows, means your life is likely to be more stable and your bank account more flush. See, I moved to a small town. I could walk everywhere in this town within 15 minutes. 15 minutes. If I have to go up to the hill where the Walmart is, like the outside of town, which is about 2 kilometers, maybe 3 kilometers, maybe max, probably half an hour walk, right? But to be really frank with you guys, that's why cities are becoming more and more undesirable for a lot of people, and that's why I think I made the right move getting out of that big city, because the cost of living isn't worth the stress and traffic. You know, I did a video for you guys the other day. I spent $70 a month on $60 a month on gas. You know, my car insurance is dirt cheap in comparison to other cities because I live in a small town, right? So it all adds up in the end, and it just the release of stress you don't have on you is just phenomenal. So if the economy is doing great, then what's happening? We know why. Subprime. So let me know what you guys think. Automotive industry, what's going to happen? What do you guys think is going to happen in the automotive industry now with consumer confidence at one of its lowest, I think, since 1975? How do you guys feel about that? That people aren't buying a blender anymore because they can't buy it on credit. How are they going to get their smoothies done? Let me know in the comments below. Consumer confidence, automotive industry. Why are people taking on so much debt? Why are they doing this to themselves? Do they actually think they miraculously will win the lottery one day? Well, I hope everyone wins lottery, but you know what I mean. Comment below. Let me know. Thanks for watching.